Good morning. Thank you for being here for the Hedge Investment Credit Fund monthly report of November. November was a slightly down month for us, around 25 basis points, half of it from our long-short equity book net of hedges, a variety of little addition and subtraction from different names. The biotech kind of complex has suffered a little bit. We think that is a great way to play the AI and the impact that will have on improving the productivity and profitability of the R&D budget. So we think a diversified portfolio there is still a very good way of playing the sector and AI. On the other themes, we played well on the AI theme through Google and Intel, that we think will be probably much better position going forward than what is already being priced as far as Microsoft or Nvidia are concerned. Away from that, on the macro sector, we kept on doing well on Ukraine and Venezuela. We like both. We think Venezuela could actually go through some peaceful changes in the short term, and that would improve massively the valuation of the bonds, which are trading at around 30 cents on the dollar. Ukraine obviously is a much more mixed picture. We think Russia is exhausted and Ukraine as well, but the chances that Ukraine will either get a acceptable peace deal or a strong financial support from Europe are high. So we think there is probably some good development there, and hopefully some sort of immediate ceasefire and cessation of hostilities. We have been much more cautious in our long duration. We reduced that position. We really like long duration with the medium to long term view. I think in the next 12 months we'll see a substantial amount of deflation throughout the world, especially US and Europe. So we like long duration, especially distressed duration bonds between 30 to 50 cents with yield close to 5 or above. But obviously there's been a lot of idiosyncratic stories, where it was a French budget, then the UK budget, and now obviously what's happening with Japan, which could be a proper financial earthquake. So we reduced the position. We like it long term, and we're ready to add if and when the data support the view. But as of now, we're being a lot more cautious. Going into year-end, lots of events, mostly around the central banks. We have Fed first, and then Bank of Japan at the end, and in between ECB and BOE. We think this could be a bit of a loosening from the Fed, but maybe already being priced, while Bank of Japan could be really disruptive if they are much more hawkish, unwinding the entire carry trade that we've seen for the last 10 plus years. So we remain very opportunistic, very cautious, and trying to be as liquid as possible into year end. Thank you.